It's time now for our 360 round. For that, let's bring in our panel to discuss Oracle. Joining us now, Ron Westfall, VP Networking Infrastructure at Hyperframe Research, and Robert Cantwell, founder and portfolio manager at Upholding Investment Management. Thank you for being with us today. Ron, I'd love to start with you. Just some key takeaways from the report. We saw, a huge beat on EPS. We got this record-breaking RPO, explosive cloud growth, but I'm looking and we're down 13.5%.
Yeah, that's a great place to start is on the RPO, because that's where I believe Oracle is a sound investment for the long term, despite the recent dip. And, what's not to like about it? It's a record of $523 billion in terms of future revenue that's under contract. That, in other words, is over $500 billion. And a lot of that is reflected in an increase of $68 billion just from the last quarter, and a stunning 433% increase over last year. And so this is tie into the fact that they're just gaining new deals. That is with players like Meta and NVIDIA, as well as their ongoing relationship with OpenAI. And to underline this record-breaking RPO is the fact that their top line over the next 12 months will reflect that 43% of that RPO will be implemented during 2026. So that's $225 billion that's built in, offsetting, I would say, significantly the $50 billion or so that they've had to plan into their CapEx. So this, I think, is demonstrating that Oracle is really at a solid position overall, certainly over the next calendar year.
And Robert, I have a feeling this conversation might get interesting here based on the notes that you sent over. You've argued that Oracle is blowing air into the bubble, taking on any RPO deal that it can get. Do you believe that this RPO surge is more of a red flag than a revenue lifeline?
Let's go back in history here really briefly. Starting just a couple years ago, Google and Microsoft were the first to start ramping their CapEx. The market began rewarding them very quickly for that because they saw them as early movers in AI. Meta, who was a little bit late to the party, came in and said, we need to play catch up, and they doubled their CapEx last year, and they're now, the third head in the race. Oracle's coming in last to this party. Are we really going to believe that the last guy to the party who's ramping their CapEx without an incredible advertising model to support it? What's so wild about what Oracle is doing is their core business is not financing this thing. They're financing it with debt. And these RPOs, more than 75% of them start in 24 months. As an investor that's asking me to take risk on this thing, it just seems asinine to ask me to be an equity investor in someone that is leveraging up a core business that can't afford the outlays that they're currently putting out. So I'd love to understand, for the shareholders that are long this thing, how are they comfortable with how management is spending this kind of money right now?
Ron, perhaps you can answer that, since you think it is a good long-term play.
I love this controversy, this discussion. Yeah, I think I underlined it. I think there's the fact that 43% of the RPO will be implemented in 2026. That's my understanding. And so, yeah, there could be a debate about how much of that will actually be implemented in 26 alone. So we're looking at beyond 26. Okay, there's more RPO to anticipate. And as a result, I think this is going to give Oracle that ability to meet their strategic goals, both in terms of their business strategy as well as financials. I like to spotlight specifically their OCI business, and that increased 66% year over year. And the fact that when it comes to GPU-related cloud revenue, that increased by 177%. So this, I think, is offsetting, that debt concern and about whether or not the RPOs will be real when it becomes time for these other partners and customers to pay for the Oracle services. But I also like to debate whether or not Oracle is late to the party. I think when it comes to innovation areas such as multi-cloud capabilities, Oracle is actually at the front end of that. And now we're seeing players like AWS emulating Oracle's multi-cloud strategy. So you have to look at multiple parts of what's going on here. And the parts that I think are favoring Oracle is just that, cloud innovation, and the fact that they are just growing their Oracle cloud business so quickly. It really doesn't matter about, AWS and Azure and Google Cloud, having a slight time to market advantage, a couple of years ago.
All right, Robert, so coming back to you, we got some big names in there, some big competitive names with AWS, Azure, Google Cloud. How much of a competitive threat do you believe they are? And also, I want to address you saying they're mortgaging their core business to chase AI. Do you think that Oracle is overestimating its long-term ability to compete with hyperscalers?
Great question, Marley. So when a company takes this type of a risk, there's not really all that much work to do in actually studying this company anymore. And the $523 billion of RPOs that they've signed up with with whatever scrutiny, the analyst's job is to now study the businesses of those $523 billion commitments, because you're no longer investing in Oracle's core business. You're investing in those customers' ability to follow through on those contracts. And Oracle's very good with their language. Saying 43% gets implemented next year, that's not 43% recognized. That's not 43% cash flow in the door. That's saying they're turning on probably 43% of the contracts. But let's give us a real cash flow number, guys, for us to do this the right way. So what happens then is when you start studying the models of the companies that are making these commitments, well, what is the profitability and the sustainability of those models? And the average Google search, you type in, you search for a trip to Bora Bora, that costs Google about 1/10 of a cent. You put that same Bora Bora travel search into ChatGPT or Gemini, that company's paying anywhere from 3 to 5 cents to give you the answer. The answer is better, but it's costing that business 30 to 50 times more than the Google search to actually deliver it to you. That gap is really wide right now. And one of the interesting things that's happening with a business like Google is that they are benefiting from the fact that these chatbots are making search so much more powerful. So Google reported an acceleration in actual search volumes in the last quarter, which they hadn't seen in years. And so their business is working insofar as they're getting some benefit from that extra chat, but their margins are going to get decimated on this. What folks are, I think, having a hard time modeling right now is the excess CapEx that's going in right now. That's going to show up later as lower margins. And so until this gap gets closed between the 30 to 50 times difference between a chat search versus a Google search, I can't underwrite that $523 billion RPO is showing up for Oracle.
I want to thank both of you for being with us. Ron Westfall from Hyperframe Research and Robert Cantwell from Upholdings Investment Management.